Hi friends, how are you? Very good evening to all of you. So I hope you guys are doing good. This is going to be a video lecture for exclusively those students who are writing Diploma in IFRS of ACCA examinations or ACCA professional level SBR strategic business reporting, or if you are a student who is doing F7 financial reporting. So in this lecture, we are going to discuss one very important IFRS, that is IAS 38, Intangible Assets. Before I start with this, academic content, I'd like to tell you there is always an edge, an advantage if you have a certification or an extra diploma which is relevant for your studies. If you are professionally qualified chartered accountant, cost accountant or company secretary, or if you are a student who is studying CA any level, intermediate level or final level, or if you are a student studying CMA any level or CS any level, or BCom, MCom, MBA, whatever it is, or if you are an employee looking for betterment in your career or a promotion, if you are working in something related to accounts, finance, business administration, operations, etc., this diploma in IFRS can be a weapon, can literally be a weapon in your resume. Because imagine there are two candidates for a job interview. One is BCom with diploma in IFRS. Imagine there are two candidates for finance manager post. One is a chartered accountant and another one is a chartered accountant with the diploma in IFRS. So definitely at any level you take it, at student level you take it, it adds to knowledge, at employee level you take it, it adds to your career, at professionally qualified, competent accountant in practice you take it, even then it opens doors for the global opportunities. So that is the reason I started mentoring this, diploma in IFRS, because long back I have completed this IFRS training from Ernst & Young. I think you are well aware of this Big Four. EY is one among them. So I have taken, training from EY for this IFRS long back. After that, I started teaching, and I also teach CA final. So with that little brief backdrop of significance of diploma, or you call it SBR, shall we enter into the academic content now? So on the screen you can see IAS 38, which is the material prepared by me, Intangible Assets. So open your diary or open your notebook, put the heading IAS 38. I'll be taking you through the whole theory and problems. Okay, so put the heading IAS 38, International Accounting Standard 38. What is the name of IAS 38? Intangible Assets. Okay, put the heading IAS 38, Intangible Assets. Now, before I start with the standard, I'll give you 30 seconds of time. Not much. I'll give you 30 seconds of time. Can you tell me some examples, few examples of intangible assets? Examples of intangible assets. Your time starts now. Okay, in your notes you can write down. Examples of intangible assets I want from you. Bolo. First one is goodwill. Yes. Goodwill, Pavan sir. Next, brand. Brand values and brand. Brand is an intangible asset, isn't it? Then software. Software. Okay, anything else? Anything else? Licenses. License to operate a bar, license to operate discotheque, license to operate school, license to operate college, license to operate a bank, license to operate insurance company. Licenses are damn costly, I'm telling you. License to operate a toll gate, toll road will be there, no? Toll plaza. How costly those licenses are? Broadcasting rights. You want to sign A.R. Rahman for one movie, and he signed, you gave money, and now you have an album which is not yet released. People will stand in queue to purchase that from you now. Broadcasting rights, telecasting rights. Okay, don't you think all these are examples of intangible assets? Isn't it? If you start writing, there will be a big list. So many intangible assets are there which we see in our real life. For example, you take your laptop. Can your laptop operate without operating system? No. Can your mobile operate without operating system? No. How many softwares you have in your mobile? How many softwares you have in your laptop? All these are, intangible assets only. But some of them are not considered as intangible asset for the purpose of accounting. That is a different story. Is it an intangible asset? Yes. Pavan sir, can I recognize it in my books? For that, there are certain rules. Okay. Now, let us go to this part. First, we are seeing at the examples. A patented technology, computer software, database, trade secrets, trademarks, trade dress, newspaper mastheads, internet domains, video and audio visual material, motion pictures, telephone programs, customer list, mortgage service rights, then licensing, royalty, standstill agreements, all these. And you can give list of so many other assets are also there which you can add, which you can keep on adding. This is few examples. These are few examples given. Okay, so now let us try to understand. In the heading of the standard, we have two parts. One part is asset. Question number 1, Pavan sir, what is asset? 2, what is intangible asset? So now we are going to discuss two things. What is an asset? 2, what is an intangible asset? So can I say, where is my mobile phone? Hello? Mobile phone kahan hai re tu? Sorry, I don't have. So this is available with me. So is this my asset? The answer is yes. Is this my asset? The answer is yes. Is this my asset? Yes. Is this my asset? Yes. So when can you say that something is your asset? So definition is given. Asset is a resource. What is that? Asset is a resource on which you can exercise control, which came into your hand due to some past event, which will give you FEB. Pavan sir, FEB, I know, future economic benefit. Correct. FEB is not February, FEB is future economic benefit. So what is this? What is this? Let us see. So look at this para. First bullet point, an asset. This para. An asset is a resource. An asset is a resource that is controlled by the entity. If I am a person, I should control my asset. For example, when I use this asset, up to me. When I throw this, up to me. When I sell this, up to me. So this resource will never ask me, Pavan, don't use me today. Because it is controllable. Controllability means the ability to use, the ability to sell. So one, it should be an asset. An asset should be a resource that is controlled by the entity. How the asset came into your hand? Because of some past event. What is the past event? What is the past event? I purchased this. Because of that, it came into my hand. That is a past event. Or my dad gifted this to me. That is a past event. Or government grant. Government has given this to me. That is a past event. Or business acquisition. I have acquired one business. Who owns this? That is a past event. Or I did research and development and I have developed this keyboard. Wow. That is a past event. So due to some past event it came, and from which future economic benefits are expected. Pavan sir, what is this future economic benefits, Pavan sir? It can be, future economic benefit can be a cash flow or it can be other asset. So what is the meaning of future economic benefit? It can be cash flow or it can be other asset. So when I have this, keyboard with me, mind you, now we are talking only about an asset. So far I have not started intangible asset. Asset is a resource. Yes. Can I control this? Yes. Has it come into my hand due to some past event? Yes. Will it give future economic benefit to me? If I sell this, will I get some amount? Will I get some $10? Yes. Yes, that is cash inflow. Or if I use this, will it help me in creating another asset? Yes. Because when I am using that, I am delivering lecture. When I am delivering lecture, I might get, some asset, like that could be a receivable or that could be cash again. Or this helps me in manufacturing, this helps me in rendering service, this helps me in marketing. So all these are assets. So basically, what is an asset? An asset is a resource which is controllable, which which has come to your hand out of one past event, from which future economic benefits are expected. Any of these conditions not satisfied, it is not an asset. Any of these conditions are not satisfied, it is not an asset. Now write down example 1. Example 1. Staff training cost. $1 million. Staff training cost $1 million. You have incurred $1 million and you have given extensive training to your staff in the artificial intelligence or in the latest technology, in data analytics, in some very useful domain. You have given extensive training to your staff. Pavan sir, can I capitalize this particular cost? Can I create an asset out of this particular cost? The answer is no. Staff training cost cannot be capitalized as an asset. Now you will say, Pavan sir, we call my employee human resource. It is a resource. I have incurred money, past event. Future economic benefit will come because he will work next 5 years in my company. Future economic benefit will come. But can you control the employee? What is the meaning of control here? Not asking you, hey, come at 9 o'clock. Don't leave the office before 5:15. Your lunch time is only 40 minutes. This is not control, beta. Control is the ability to use, ability to sell. Now you might say, but Pavan sir, I can control my employee because we have an agreement. I have given him employment letter in which he cannot resign before 5 years because I have spent too much of money on his training. Go to any country in the world, go to any court in the world. Any employment letter or a bond executed by an employee when joining into a job without an exit clause is void because it amounts to slavery. How can I say, hey, you have to work in my company for 5 years, okay, you cannot resign? How? Even if I pay 100 crores to you also, how can I say you cannot resign from my company? There should be a contract period, there should be exit clause with a penalty. Pavan, if you resign from my company, you need to pay 100 crores to me, valid. But you cannot resign from my company, full stop, not valid. So when the competitor wants to hire this guy, he will pay that 100 crore rupees penalty to you. He will give that $1 million penalty to you because this guy is that big resource. That is the reason you are giving this big salary to him, no? So practically you cannot control the staff. For accounting purpose, staff training cost can never be recognized as an intangible asset in the books. Write down. No intangible asset can be recognized. No intangible asset can be recognized out of staff training cost. No intangible asset can be recognized out of staff training cost. Therefore, staff training cost is to be recognized as an expense in SOPL, statement of profit and loss, or you call it income statement. What is the accounting treatment of staff training expense? Charge it to P&L, that's all. Charge it to P&L. But Pavan sir, huge amount to Pavan sir. Beta, whatever the amount is. Close your eyes, charge it off to P&L. You cannot recognize an asset. This is point number 1. Point number 2, advertisement, branding, campaign, product launch. Can it be capitalized? Say you are launching a perfume, a new fragrance perfume, and you hired one of the best models or one of the best, celebrities. Say Angelina Jolie. And you have paid, say for example, $100 million to her. Or you hired, you entered into an agreement with Cristiano Ronaldo or Lionel Messi, my personal favorite. Okay, Pavan sir, I have paid $100 million to Lionel Messi. Can I recognize the asset? The answer is no. Advertisement expenses, branding, campaign, product launch expenses are essentially revenue expenses in nature. They are essentially revenue expenses in nature. Charge it to P&L. Intangible asset cannot be recognized. Now a student might ask, but Pavan sir, don't you think this $100 million paid to Messi will not have only impact for 1 year? I will get future economic benefits for 5 years. My sales will increase. My market share will increase. Don't you think it is common sense for me to charge this $100 million to 5 P&Ls by recognizing an asset and amortizing? By recognizing an asset today and amortizing over 5 years. Don't you think that makes more sense? No. Because IAS 38, International Accounting Standard 38, said one thing very clearly. Increase in sales, increase in profits, increase in market position or market share, they are non-controllables. Can you control it? Obviously no. I thought, this guy will do branding for my product and my sales will increase. Sales might increase tomorrow. That doesn't make any difference, but they are non-controllables. You cannot control market share of your company, no? That is controlled in the market. Can you control how many number of units you will sell? No. You can reduce it intentionally. You can put effort to increase it. That's all. They are not controllables. That is the reason they said advertisement, branding, campaign, product launch expenses. Third question. Can I recognize internally generated intangible assets? Can I recognize internally generated intangible assets? For example, you might be knowing this Tata Group from India. They are a global group, of course. Jaguar Land Rover is also a subsidiary company of Tata Motors. So Tata Group is a well-known group. I read one article few years back. Ernst & Young, they valued this brand and they said that this brand in Indian currency is 4,60,000 crore rupees. Oh my God. What is the value? 4,60,000 crore rupees. Reliance Jio, what is the brand value? Microsoft, what is the brand value? And what is the brand value of Apple? Come on, you are speaking about Tata, you are speaking about, Jio. And what about Apple, dude? Its brand value touches the sky. Can they recognize that in their financial statements? And can they say, we are proud owners of this particular brand? So Apple brand and this bloody logo, this is $10 billion. Can you tell that? The answer is no. So internally generated goodwill, internally generated brand. Internally generated goodwill. Internally generated brand. So hello, excuse me, what happened to you? Can't be recognized as an asset. Cannot be recognized as an asset. What about other internally generated intangible assets? Like Pavan sir, I am into research. I am a pharma company. I have COVID vaccine license. Ta-da. But COVID license, how you got? You started research and development. Your research is successful. You are able to commercially exploit the concept. You are able to develop that into a drug. You are able to, prove to the satisfaction of the government authorities and medical regulatory authorities that this bloody 2 ml works on a human body. So take my 2 shots and you will be COVID protected with efficiency of 91%. Give $100. So when you internally generate any intangible asset other than goodwill and brand, then the answer is yes, it can be recognized as an asset. But hello, hold on, one small star mark will be there. 90% discount, small star mark, terms and conditions applicable. In the terms and conditions, what do they say? 90% discount on this jeans pant. This jeans pant is $20, but you give only $2, $18 discount. Terms and conditions. We need both of your kidneys. Give $2 and 2 kidneys. Welcome to India. So, internally generated intangible assets can be recognized. Internally generated intangible assets other than goodwill and brand can be recognized subject to certain conditions. What are the conditions? This internally generated intangible assets came into existence because of R&D. What is R&D? Research, development. In a nutshell, research cost, no, you cannot recognize any intangible asset out of research cost. Why? Because at research phase, product is not yet successful. At research phase, product is not yet successful. Development cost, yes, again subject to certain conditions. So the development cost incurred by a company can be recognized as an intangible asset provided 1, 2, 3, 4, 5. Often sir, development means already research is successful, then only I'll do development, no? So why can't even I capitalize that? Sometimes it might not have the ability to generate future economic benefits. Say for example, you have spent $1 billion. You have spent $1 billion and you found a drug for, COVID vaccine. Or you found a, one medicine for COVID. Okay, so you found it in 2023. What if by 2023 there is no COVID case in the world? This is probably what I am, praying every day. So you have spent $1 billion and research is successful. And then you have spent, $500 million for development also. What is the use when there is no market? So remember it like this. First idea. One idea came in your mind. This is one phase. Then you started research. Then this is research phase. Then development. Here you will launch product into market. This is time. Pavan sir, somewhere I saw this. This is normal distribution. In correlation we study that bell. No. This is not that bell, this is another bell. Jingle bell, jingle bell. What is the other bell? Toing, 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 toing. You remember this? This is called introduction stage. This is called growth stage. This is called maturity stage. This is called aging or decline stage. This is called product life cycle. So before you launch your product, immediate previous episode is development. Before that, research. So if you observe here, the probability of future economic benefits is much higher because you are about to launch the product. It is almost ready. Research is successful. That is the reason this IAS 38 says, beta suno, listen to me carefully. If you have spent any money in this phase, because the probability for future economic benefits is very high, you are allowed to capitalize the expense. But when you have spent money here, I'm so sorry to inform you, I understand your pain, I understand your pocket, but you have to charge it to P&L as cost or expense or loss. This goes to P&L only. This goes to intangible asset. This is the accounting treatment. You understand? So what did we discuss? A quick summary ho jaye, a quick summary. Can staff training cost be capitalized? No. Can advertisement campaigns or branding or blah blah blah, this kind of promotion, propaganda expenses be capitalized? The answer is no. They cannot create intangible asset. Can internally generated intangible asset be recognized in the books as an asset? The answer is, if it is goodwill or brand, no. But if it is anything other than that, it could be a copyright or it could be a patent that is internally generated. It could be a formula, it could be a recipe. The answer is yes, you can capitalize subject to certain conditions. Research cost? No. Development cost? Yes, subject to again conditions. Now our Mr. John Doe will get a doubt. What is the doubt of Mr. John Doe? Pavan sir, from 2016 to 2021, I have spent $5 billion on research. From 2016 to 21, I have spent $5 billion towards research. So this is charged to P&L. Why? Because you said IAS 38 want a high probability of future economic benefits. That is not available with research. So I charged it to my P&L and I was bearing these losses and all. But God is so kind on us. In 2022, what happened, you know, Pavan sir? In 2022, our research is successful. And now estimated revenue from this product is $225 billion. This gonna shake the world. Huge success. We are going to kill it. Now our John Doe asks, now that I have a very high probability or certainty of future economic benefits because of successful launch of the product, we launched the product, can I reverse this $5 billion which were already charged to P&L? Can I reverse this $5 billion which were already charged to P&L? Can I convert it into intangible asset now? The answer is no. Accounting standard said, International Accounting Standard 38 said, no, it is not allowed. Sorry. Once you charge it to expense, you cannot plow it back. You cannot reverse it back to create an asset. That day, no future economic benefit, charge it to P&L. That's it. Full stop. Today, because I am a chartered accountant, you know, can I capitalize the expenses I have incurred in my 10th class and 9th class? No. You understand? Isn't it beautiful learning accounting this way? And now, An asset is a resource that is controlled by the entity as a result of past event and from which future economic benefits are expected. This is asset. Pavan sir, asset you explained. What is intangible asset? Come on, dude. Intangible asset is an asset without physical substance. Intangible asset is an asset without physical substance. That's all. But Pavan sir, they used one more phrase also, non-monetary asset. Pavan sir, they used one more also, identifiable non-monetary asset. So what is basically intangible asset? Three characteristics you call it, three features you call it, three attributes you call it, or three conditions you call it. There should be three critical attributes. What is that? One, identifiability. Two, control. Control means the power to obtain benefits from the asset. And three, future economic benefits. Here, identifiability is to be highlighted. Now, let me tell you this. So, put the heading in your notes. An intangible asset is an identifiable non-monetary asset without physical substance. So, any of these assets we have spoken about a while ago. This list I have given. No. Goodwill. Can you see goodwill? No. Can you see brand value? No. Sir, brand logo is visible, but brand value as an asset is not visible. Software, is it visible? No. License, is it visible? No. Broadcasting rights, is it visible? Sir, but broadcasting right is there on the paper. No. Beta, that paper is not even 2 cents. What is the value of this paper? $1 billion. So, all these things passed third test without a physical substance. Now, what is a non-monetary asset? Assets and liabilities are categorized into two: monetary items, non-monetary items. Assets and liabilities are broadly classified into two. One is monetary item, second one is non-monetary. What is a monetary item? A monetary item is an item which will give you predetermined fixed amount to be received or paid. In case of asset, to be received. In case of liability, to be paid. So if there is any asset where you know that when I settle, when I liquidate this asset, when I sell this asset, I know how much exactly I'm gonna make. For example, sold goods to John for $60. He said he'll pay after 1 month. You tell me, after 1 month, how much you will get? $60. So do you know how much you get? Yes. So it is a monetary asset. It is a monetary item. Okay. Borrowed money, $1 million from JP Morgan or Bank of America. Borrowed $1 million. Do you know how much you need to pay? Yes, they have given a schedule. What is the principal amount? What is the interest accrued? What is the EMI? I know how much I need to pay. This is a monetary asset. Property, plant and equipment. Pavan sir, I have purchased a beautiful laptop. Is it a monetary item? No, because the day when you sell this asset, how much you gonna get, you don't know today. Land, building, intangible assets like goodwill and all. Today, value using some valuation technique, I said it is $2 million in my books. But when I sell this intangible asset, how much I get that day, I don't know. These are non-monetary items. These are monetary items. Okay, more about this we'll discuss in foreign exchange standard. Don't worry about it. So what is basically a monetary asset? A monetary asset is an asset where you have a predetermined amount in terms of some dollars, that this much I am going to receive when I sell the asset. That is a monetary asset. Non-monetary asset is an asset where when you sell that, how much you get, you do not know today. So intangible asset is a non-monetary asset without physical substance. Pavan sir, what is identifiability? Now imagine I purchased one laptop. I purchased one laptop. How much is the laptop? Imagine it is $1,000 or 1,000 pounds, 1,000 euros. I purchased a laptop with 1,000 euros. I know that this laptop has two parts. One is hardware. Second one is Windows operating system. You call it Linux, you call it Unix, you call it iOS. Some operating system is there inside that. Without this operating system, your laptop won't run. You know that this is 700 euros and this is 300 euros. Because if you want to buy Windows separately, you have to pay 3,000 euros. Imagine, just example. What is the journal entry you write? Will you write the journal entry laptop account debit, cash account credit, 1,000? Is this the journal entry you write? All Indian students, this is the way we write journal entries globally. In India, you write laptop account debit to cash account, and you will write them after 5 spaces and all. That is the convention. That is Indian. This is global. So this is how we write debit laptop 1,000, credit cash 1,000. Or this is my journal entry one. Or would you like to write debit tangible asset property plant and equipment, which is laptop account? You know how much it is? 700. Debit intangible asset operating system account 300. Credit cash. We don't need to write account also. Debit PPE, debit IA, credit cash 1,000. So do you think this is the correct journal entry? Which journal entry is correct? Journal entry 1 is right or 2 is right? What do you think? Do you think journal entry 1 is right or journal entry 2 is right? It is journal entry 1 because I admit, accept, I recognize, I appreciate the fact that there is intangible asset in this laptop which cannot be separated and sold, So this first test is there, no identifiability. What is second test? Non-monetary. What is third test? Physical substance. What is first test? Identifiability. Identifiability means separability. Can I separate this and sell this? Can I separate this and use this? If that separability is not there, you cannot say it is identifiable asset. So when you purchase laptop, this is wrong journal entry, because even though operating system is there, it can be used only with the laptop. Till the time you use the laptop, operating system is useful, but you cannot take operating system out and sell it. You cannot take operating system out of your laptop and give it on lease to other person. So there is no identifiability for this operating system here. Isn't it interesting? So again, come back to the definition. An intangible asset is an identifiable. If it is not identifiable, don't recognize as an asset. Identifiable, non-monetary asset without physical substance. Super. So what are required? 1, identifiability. 2, control. 3, future economic benefits. That's all. And then examples already we have seen. Pavan sir, how can I acquire intangible asset, Pavan sir? Simple. You can pay cash and you can get it. That is called separate purchase. Or you acquire one company in a business combination, one entity in a business combination. Along with the entity, all the assets, all the liabilities will come to you. in the assets of the entity, target company which you acquired, they have one intangible asset. Now in business combination, that intangible asset is coming to you. Or can government grant this intangible asset to you? A license. Government has given you license free of cost. Normally it takes $1 million. Government has given you free of cost. Intangible asset came free. That is a government grant. Officer, can I exchange something which I have? Some tangible asset, some intangible asset, or some thing like car. I'll give my car, I'll give my watch, I'll give my land, I'll give my factory, and I'll get one license. Because you do not have enough cash to acquire software. So you went to the software vendor and said, hey, please develop this software for me and give it to me. They said $2 million. You said, I don't have $2 million. I have one property which is $2 million. Will you please take that property and give this license? The company said, okay, no problem. So that is another one. Or you can develop it internally, in-house. So these are the modes of acquisition. 1, intangible asset can be acquired by a separate purchase. 2, business combination. 3, government grant. 4, exchange of another asset. 5, self-creation. Now comes when an intangible asset can be recognized. When an intangible asset can be, how an intangible asset can be measured. So till now what we have discussed is the basics which sets the foundation for the standard. Next, moving forward, recognition, measurement, subsequent measurement, amortization, disclosure. If we discuss these things, the standard is over. Recognition means when can I pass the journal entry. Measurement means what is the value on the initial recognition. Subsequent measurement means on the next balance sheet day, next reporting day, subsequently what will be the value. How to amortize this in my SOPL, statement of profit and loss, or income statement you call, and what are the disclosures to be made. Ta-da! This will be seen in the next session. So that's all for today, you understand. So open this document, overview, what is IAS 38, what is the scope, inclusion and exclusion. Some things are excluded, for example financial instruments, exploration and evaluation assets, expenditure on development and extraction of minerals, intangible assets arising from insurance contracts. These things are outside the scope of IAS 38. Pavan sir, why Pavan sir? Array, all these will have another accounting standard. For example, insurance contracts, 4 is there. Then financial assets, 32 is there. Exploration, 6 is there. So because they have a separate standard, don't come to this particular standard 38, go to your own standard. That's all. And then what is intangible asset, what is an asset, examples, acquisition, all these things we have seen, and we will start with recognition in the next class. After this 5 parts are over, I will make you work. 20 beautiful MCQs will be there at the end. Descriptive big questions will be there, practical questions and all I will explain on the board, and you will write down the notes. MCQs I will give for your practice. Okay, so any doubts before we log off? That's all for this session. If you have doubts, please ask me. Otherwise, I am done with the session. Thank you. See you in the next session.